I want to say welcome everybody. This is truly an honor for us to finally, I feel like we haven't been, be able to meet each other in our regular luncheon meetings, but today we are meeting here and we truly appreciate everybody to be here. I wanted to, first of all, to show you, to share this quote that I see. The key to success is often the ability to adapt, by Confucius. And this is very important for me to share because as we mentioned earlier, a lot of people had been, including myself, a little bit shy away from the social media. But because of this shelter in place, I became a lot more social on social media. And because this is the only way for us to connect. And I hope that, in our community, there were a lot of people who probably feel like, we still need to meet face-to-face, which we absolutely agree. But at the same time, we have to adapt to these changes so that we can protect other people. In March, when we canceled our meeting, it was actually a difficult decision because we had canceled our meeting well before this whole shelter in place was in order. But then we did see the severity of this disease, and then we just did not want to risk any of our members to get sick during our meeting. So that's why we canceled our March meeting. So I truly appreciate everybody's patience during this time. And then we want to make sure that we provide these educational events still online so that we can continue to share the knowledge from our professionals. Now, as many of you may know, CCIM, and our mission statement for CCIM Institute is to elevate our members to the highest levels of success in the commercial real estate professions. As you know, most of CCIMs, there's only 6% of CCIM, 10% of the commercial real estate professionals have the CCIM PIN. And the CCIMs tend to earn twice as much in annual gross personal income than non-designated professionals, according to NAR. And 67% of the CCIM designees actually hold senior titles. A lot of them are executive in their company. And the CCIM, because of their goals, is to educate. During this coronavirus, as a matter of fact, tomorrow we're supposed to have our national conference, but because of the coronavirus, all the conferences obviously have been canceled. And they have provided resources online. So we really welcome anyone, if you are CCIM members, go online and take advantage of these resources. And one great, really awesome thing is that they actually offer this complimentary Destiny-only refresher courses for all the Destiny. And I had registered right away because it provides you all the CI 101, 102, 103, and 104 for free right now. So if you are a Destiny, be sure to register for this. And they also actually offering a lot of some of the smaller, shorter education courses online for non-Destinies. So feel free to browse around on our ccim.com. And lastly, not lastly, but one of the things I want to make sure that we are all still staying connected, again, even though we cannot see each other face to face, but we still have our social media pages. We have Facebook, we have LinkedIn. As a matter of fact, we also have YouTube where we're going to upload this webinar as well. So I hope you guys will make sure that stay connected with us. We will constantly make some announcement on social media in addition to emailing to you. We also have a members only private group. These are all for Northern California chapter members, paid members. This is where we share referrals and also share a lot of information, knowledges. So if you are a member, please go to our members only Facebook group so that, if you have questions or you have a deal, you have wants and needs, feel free to post it on there. And of course, without our leadership team, without our board of directors, our chapter cannot continue to run. So I want to say thank you for our leadership team and also our board of directors, because on the back end, we're still meeting, we're still talking constantly. And as you know, Aziz Khatri was our past president in 2019, and I am your current 2020 president. And Tim Tran, he is our president-elect. So he'll be the president for 2021. And Tim Tucholsky, he is a CPA and a CCIM. So he is also taking up the treasurer as well as the secretary role for our chapter. And Teddy Swain, he is our technology officer. And alongside, we also have about 15 other board of directors who have been working really hard, constantly trying to put together programs for our membership. So please feel free to contact any one of us if you have any suggestions at all. And of course, we also, our chapter cannot run smoothly without our sponsors. We truly, truly appreciate our sponsors being able to help us through this difficult time. And we typically throw about 30 plus events a year, which include a lot of golf, which include the golf tournament. We are hoping still at the end of the year, we can still do the golf tournament. So we have a platinum sponsor, which is Sensiba San Filippo. And we have our gold sponsors, Heritage Bank, Crexie, Bangerter, and Chase. And we also have our silver sponsors, Business Finance Capital, Chicago Deferred Exchange Company, Mission National Bank, and Redwood Mortgage. Of course, we also have our bronze sponsors and media sponsors. Without your support, our chapter won't be able to run as smoothly. And our goal is really to put together as many events as possible. As a matter of fact, we just finished another webinar with our Southern California chapter CCIM just about half an hour ago. So we would love to continue to provide these events for you. Now, before I go to the next segment, which is going to be a marketing segment, I want to run a poll. So if you guys, let me go ahead and launch it first. Do you guys see the poll right now?
Yes.
All right. So I want to take a poll to ask you guys, what do you do mostly during this shelter in place? Are you doing nothing? Or doing a lot of household duties, social media, Zoom webinars, calling, or other? This is start coming in. A lot of people doing calling and texting. Wow.
Yeah.
And a lot of people are doing cooking, gardening, drinking, and taking care of kids. I have to say that even myself, and some of you might be on my social media, I mean, my husband and I, we do drink. We hobby drinker in terms of like wine or beer. And we've been really, our grocery shopping has been involving a lot of alcohol lately.
Why not? Why not?
Yeah, why not? Awesome. See, during this shelter in place, very, very few people, only one person doing nothing, but everyone is doing a lot of calling, Zoom webinars, social media, of course, household duties. We are still here to connect with people, and we are taking advantage of all the technology and communication tool that we have. So thank you so much for participating in this poll. So for now, let me go ahead and turn over to Steve Peterson to host our marketing segment.
Hey, well, thank you, Helen. Again, a bang-up job in your leadership role. And I want to just say it was great foresight, actually, to cancel the March meeting before the shelter in place. So really appreciate that. Appreciate your leadership, everything that you're doing. So thank you. And good morning, everyone. I hope everybody's excited to get back out here and have another great day for CCIM. I'm pulling up my screen here, which is our marketing session. We've got 6 properties here this morning. And remember, as we do these meetings, if you've got a listing, to submit this listing, email it in. We're trying to get the listings in the Friday before the meeting. But if you've got one to send in on Monday, send that in. So again, my name is Steve Peterson. I'm the broker owner of Infinity Investments. I'm your 2018 past president of this great institution, NorCal CCIM. and I'll be moderating your marketing session. So we're asking if you have any questions about the deal, why don't you chat them in, and we'll do our best to make sure that the brokers who have the listings get your questions and follow back up with you. Okay, so again, if you have some questions, go ahead and chat them in, and we'll go ahead and get right to it. So I'm going to go here into slideshow mode, and we're going to bring up, I think this is Teddy Swain's property. For each listing, we'll ask the broker who had the listing to present it. And so I'm going to open up the slideshow here. And Teddy Swain, if you're out there, why don't you come tell us a little bit more about the Samantha Townhomes in Lafayette?
Yes, thank you, Steve, and thank you, Helen, and all the board of directors for putting together this session. I'm sure this is going to be a great learning experience for everybody. I won't take too long with this, but this is an opportunity that I'm excited about. It is a development deal in Lafayette off of Mount Diablo Boulevard on the eastern side of Lafayette. It's 2 parcels, and they are currently in the application process of a 12-unit townhome development. So they've already had, the developers have already had several study sessions with the city and have submitted their formal application. So the clock is ticking now on the time when they'll actually get the entitlement. That being said, we're doing some marketing already, and the really key thing about townhomes versus condos is the trend that we're seeing is families from Alamo and other parts of the Tri-Valley are downsizing from maybe 4,000 square foot home into a townhome or a condo. But it's tough to go from 4,000 square feet to an 800-foot condo. So that's why the product type of townhomes, which are more in the 1,500 to 2,000 square foot range, vertical with their own garage, that really appeals to the demographic from the Tri-Valley who's downsizing. So this is going to be a solid deal, and it's not on the market yet, so we're just doing some preliminary marketing.
Absolutely. Hey, and Teddy, you mentioned here on the flyer, I see that it's unpriced. Do you have a price range or an idea in terms of that, or are you still kind of working on that?
Yeah. So due to the coronavirus situation, pricing is really difficult to find right now. It's changing every day. So what I do have is a pretty high level development pro forma that I'm happy to share with anybody who is interested or anybody who has clients, builders. And I can share that development pro forma, and from there we'll be able to find pricing. But as of right now, it's remaining unpriced. So give me a call if you have any questions.
Got it. And then a quick question. And there were a couple questions that I saw come in on the chat. I didn't want to pull up the chat to take the attention away from the listing. I don't know, Helen, if you could see those questions, but I have a question for you in regards to the structure of the deal. Is your client possibly willing to carry any financing, or are they just looking for a straight up cash out?
Yeah, so there's a couple parties to this. It's actually a joint venture between the owner and the developer. So at this point, they've been at it for some period of time, and their goal is really to part ways with it. And since there's multiple investors and parties to the transaction, a clean sale is best for everybody.
Got it. Okay. Well, what I'm going to do here, there are a couple questions or a couple chats that came in. I'm trying to access.
Dimitri, so what are you selling? Land with ready entitlements?
Yes. So the land has all the structural engineering, all the architectural plans done, and the formal application submitted to the city. So per state law requirements, there's now a specific period of time that the city has to make their final decision. on whether they're going to approve the project or not. And that's limited to 3 meetings. We've already had 2. So there's going to be one final meeting, which will be public. The city's planning department has recommended approval. The entitlements are not achieved yet, but they should be when we get back to normal town hall meetings. So you could expect the next 4 to 6 weeks we'll have something.
Excellent, excellent. Well, thanks a lot, Teddy. That's a real nice looking listing, man. And why don't you give us your, why don't you say your phone number or the best way to reach you in case somebody's interested?
Yeah, my phone number is 510-717-7786, and you can reach me at my email address, teddy.swain@tricommercial.com. And if you want to go online, just type in tricommercial.com and you'll find me in our database there.
Excellent. Excellent listing. Nice job. Thank you, Teddy.
Thank you.
All right. So we're going to move on to the next listing, which is our immediate past president, the great Aziz Khatri. He's got, and I don't know, Aziz, are you out there?
Yeah, I'm here.
Hi, how you doing this morning, sir?
Excellent, excellent. Thank you. How about you? Everybody okay? Doing good?
Fantastic. Couldn't be better. Well, maybe we could be better if I could see you guys in person, but we're making the best of it.
That's
Why don't
right.
you tell us about this place?
Yeah, this place, it's a retail in the front. There are 2 retail units in the front, 1 in the back. The beauty about this, the one in the back is a residential unit. It's a location that's really, really exciting about this. It's in in Fremont, Mission Boulevard in Washington, within a block in that corner. And it's an excellent location. The houses in that area sell for $2 million and up. And the unit in the back, the residential unit, it seems like it was done without permits. So probably has to be demoed. It's a small little house. And the way we saw this, met with the seller, the next day there was shelter in place. So we have not been able to go inside the residential units at all.
Yeah.
When we were doing when we did the research, we thought it would be priced at about $800,000.
Yeah.
And then because of the market crash, seller really wants to sell it. So I said, okay, let's put it at 20% below the market and let the market come up with offers.
Nice.
So that's what we are doing here. It's not on the market yet. It'll probably be another week or so because unfortunately we have to do all the residential disclosures because there's a house in the back, even though it's not legal. And we have to be able to get inside. Nobody can go inside right now because there's a tenant in the house there. The front unit, we will be able to go, but even there, basically on one of them is a hair salon. There are multiple tenants there. The other one is a nail salon. So I think it's priced very, very well. Location is excellent. The lot is 7,500 square feet. And that's all I can say at this point. My contact information is here, 510-368-8347. Email is aziz@kw.com.
Hey, and a couple of questions may have came in as well. I've got one for you. This is interesting with a home in the back, and then you said a hair salon and a nail salon in the front?
Correct.
Are they currently occupied, or those?
They are currently, those are current. Yeah, all of them are occupied.
Okay. What are the terms of the leases on the front to commercial tenants?
Mm-hmm.
You know?
The commercial, each, they are managing the hair salon. The current owner is, each seat is rented separately.
Oh, and to the landlord.
Landlord, and so they don't have any really long-term lease. It's basically month to month. Everything is month to month.
That's nice.
The issue is going to be even the back tenant resident. It's going to be, they don't have a lease or long-term lease. They have a lease, but not a long-term lease. The issue there is a residential unit, so you can't just kick them out. So just have to be a little careful about that.
And now there is an element of rent control, right? In
Correct,
Fremont. I know Fremont didn't used to have rent control, but
Right, they do.
it is in the state of California, the Golden State.
Right.
So there is an element of rent control.
And the rent is extremely low on everything. It's very, very low.
Okay, but you've priced it well, and it looks like there may be some upside. Do you think, and this might be a question for the lenders, do you think someone with their own business who maybe, since they're short-term leases, wanted to come put their beauty salon in there, do you think they could obtain SBA financing or that type of financing, or have you looked into that yet?
I haven't looked into yet. Most probably not, because in the back will be residential and that will be bigger. This will be, unless they don't do it, they just come in and they say they want to buy this as a, what do you call this, only retail, because the residential, there was an appraisal, I think about 5-6 years ago, that did not include the residential because it's illegal. So if you just go and get a rental, get a loan for commercial only, then I'm assuming you could do it for you say you're going to use 50% or more for yourself and then get an SBA financing. Yeah.
Well, looks like a good deal. Thank you, Aziz. And again, your contact information again?
510-368-8347 and Aziz, AZIZ at kw.com.
Thanks, Aziz. Appreciate it. And I know there may be a couple questions. We're getting a little bit behind in timing, so I'm going to pick it up a little bit, move on to the next listing. And again, if you have questions, chat them in. We're not going to be able to get to everyone's questions on the session, but we will make sure we follow up and get you in contact with the right folks. So this is a fourplex that I have listed. It's 6516 Foothill Boulevard. It's a fourplex at $799 in Oakland. It's 3 2-bedrooms and 1 1-bedroom. The cap rate is right at 5.9%. I listed this about a month or so ago, multiple offers, winning the contract at $850. COVID-19 hit. Buyer backed out and said, "Hey, it's COVID-19. I don't know which way which way is up, which way is down." So they backed out of it, and so we're still out there on the market. The owner lives in this top unit here with the deck, and they're going to be moving out. That market rent on the package we have is at $2,100. There's one rent at 2-bedroom at $1,700, but then there's some low rents. One's at $1,100, another 2-bedroom, and then the 1-bedroom's at $950. So it is a 5.9 cap rate with the existing expenses and the $2,100 market rent you would get for the vacant unit. And these clients have very low debt. They want to sell. They're not going to give it away, but they are flexible enough to make a deal. And I think this could be a good long-term investment for someone, being where it's at and where the tenants are, in place. There is upside in the rents, although again, rent control market. Oakland's always had rent control, so it may take a while to realize that. But for folks who are in it for the long term, this might be an excellent investment, great exchange up leg, or just a way to build your portfolio. So Steve Peterson, and if you want to reach me, infinityinvestments.net is my website. My phone number, 510-675-7755, 510-675-7755. And I'm going to move right along to the next one, which is Tim Tran. Tim Tran, are you out there?
Yes, sir. Right here.
All righty, man. This looks like a nice, sweet property. Tell us about it.
Yeah, so this property is almost 3,200 square foot. It's located in Newark, very close to the 84 Facebook and the Four Corners Shopping Center. Right next to it, you can see the picture to the right of it is Marriott Hotel.
Yeah.
It's tucked in a nice little cul-de-sac. It is zoned BTP, Business Technology Park. Next to it is a church, and so the zoning is very flexible. You can do daycare, office, industrial, obviously industrial warehouse uses, very flexible usage. The owner is an older gentleman. He's retired. He sold his business, and so he decided he wanted to test out the market 1 week before the epidemic.
Yeah.
So we put this market out there. We price it the way it is based on, this whole crisis. Have some interest, actually, even in this downtime. The guy next door is looking to expand, and we also have an after-school program operator that's looking at it. So it is vacant, and there's some stuff left in the building, but it can be delivered vacant. The owner, due to other circumstances, are probably unlikely to do any kind of seller financing, but I do believe that you can qualify for an SBA on this. So we're pricing it right under 1.3 million, works out to be $388 a square foot on this. It's a 2-story office, and then the rest is warehouse. I would put it about 40% office, about 60% warehouse. It's fire sprinklers, roll-up door in the back. It's got plenty of power, and there's 10 parking spaces assigned to this particular unit.
Nice. And Tim, what do you think, if you had to pick one industry or one particular kind of business to own this, who would be the best ideal, purchaser or operator of this space?
Maybe instead of an industry, which is pretty wide, I would say a small business owner. It's ideal. We had a software company looking at it, and they thought there was too much warehouse. Very, very strong interest from an after-school tutoring program right now. They're actually going through the loan approval process, which is a little slow these days because banks are dealing with, PPP and all this other stuff.
Yeah.
So they've been hounding me to tour this place. And so I said, I'm happy to show it to you, but you got to show me a pre-approval letter given the current condition.
Yeah.
So and then again, I think the church is looking at this. They're thinking of tearing down a portion of the wall and expanding it. So I would say those type of users are, if you look at the BTP zoning from the city of Newark, you can pretty much do all kinds of stuff with it. Anything from retail to, medical, dental, that kind of stuff is workable here.
Got it. Well, and it looks like under $400 a square. It seems like a pretty good price right now.
Yeah, it's priced pretty competitively. I think this probably would have been in escrow already if it wasn't for the epidemic. We're getting a good amount of people looking at this, at least from LootNet. We have in 3 weeks, we have almost 35,000 impressions on it.
Oh. It's a good price. And I think it'll sell, man. It's just the right business got to get it. And SBA is out there. So I know you have another listing, but why don't you just say your contact information and then we'll say it again when you get to your.
My cell phone number is 408-799-5290, and I can be reached by email at tim@ivcommercial.com.
Fantastic. And we got one more, man. Tell us about this place.
This one is in Newark off Stevenson, borderline Newark. I'm sorry, this was in Fremont, borderline Newark. It's an office industrial property. It's currently, the warehouse portion is completely leased out. So the office portion is wide open, 2 levels on a private office, on the office. We've got about 5,500 square foot available total. If somebody wanted to come in and take, half the space, then we can potentially even split up the first versus the second floor. The company that's operating there is called Critosphere. They're a share office kind of, scenario similar to WeWork, and their lease is expiring. They're looking to sublease a portion of it or all of it to a qualified tenant. And it's mostly built out as private offices right now. There's a few nice large conference rooms. There's restrooms on the first and second level. Very nicely done. So, plenty of parking, very close to the 880 freeway, very close to Pacific Commons. So I would encourage you to take a look at this if this fits your needs or one of your clients' needs. We had quite a few interested parties looking at it from a tutoring, daycare perspective, due to the zoning, we are unable to entertain those type of use. It's an industrial restricted zoning. So if there's any interest for mostly, I would say office user, we would be very open to those kind of tenants.
And is that 235 at modified gross?
Yeah, so modified gross includes pretty much everything except for electricity.
Got it. Okay. All right. And tell us your contact information one more time.
Contact information, 408-799-5290. And I'm at tim@ivcommercial.com.
Well, thanks, Tim, man. Always consistent. You got 2 or 3 listings every month, and we really appreciate that, man. And that wraps up. Actually, no. There's another one. What's about this one?
Yeah, so this one is 104 acres, located in Lakeport, California, which is in Lake County. It's about 3.5 hour drive. The deal with this is everything's controlled by the county instead of the city. Our client picked this up from a developer who was about 10 years behind on taxes. So it went to auction, and our client picked this up a couple years ago. Lives in the Bay Area, was going to develop it, but realized, with a 3.5 hour drive each way, it was something that was just a little bit too far for them.
Yeah.
The county is very flexible in terms of what you can do on this. They'll consider commercial use, they'll consider residential use, they'll consider mixed use. What's interesting about this property is it's right on the lake. So there's about 110 foot of lake frontage. So you can potentially even do, some sort of a, restaurant with a docking, scenario. So county, unlike Bay Area counties or counties up there, from my experience and working with them in terms of like getting information, they're very responsive. They're very flexible. They don't put your projects on hold. Yeah. Like some of the counties here because of under staff or whatever. It's pretty. Those folks are pretty good to work with up there.
Trying to get it done up there. Okay, well, cool. And it's at 1.48. And then this is your last one. Yeah,
that's my last listing. Yes.
Let's give us your contact information one more time.
408-799-5290. And tim@ivcommercial.com.
Excellent. Well, thanks, Tim. I appreciate it. Thanks, Teddy. Thanks, Aziz. We went a little bit over, but really appreciate everybody's properties. I know we got to get back on track with the schedule, but you guys, we can't do a lot of things under this shelter in place, but we can continue to market our clients' properties. Let's do it with the best of them. So I'm going to turn it back to Helen now.
Well, thank you so much. And thank you for all those very nice listings. And while you guys are talking, I'm busy fixing my Facebook Live and also talking to other people. See, it's like you never stop connecting, right? Now I'm going to launch my second poll here. And I want to before we get into this panelist, I want to see what everybody thinks it will take for the economy to recover. Basically back to the pre-coronavirus period. Well, people started to entering their answer. Looks like right now, most people think it's gonna take about 12 to 18 months. A lot of think it's 6 to 12 months. And we have 7 people think it's gonna take 24 months or more. I mean, obviously, to be honest with you, right now, we keep hearing so many economists and, from different studies. At first, it was a V-shaped recovery, and then now they did talk about like it could last a little longer. At the end of the day, I want to remind everybody, it's up to us if we all come in as a community to help fight this virus, to slow the spread, and then that will be the faster for us to come back to a normal economy. So, if you want us to come back and come back strong and have all these meetings again, and then to come out and learn and do transactions, please be sure right now this is time for us to be in it together and slow the spread together. All right, so I'm going to turn this over to Tim. See, I'm going to share the result first. And I'm going to turn this over to Tim, and he will start the next segment where he's going to introduce our panelists. Tim?
Thank you, Helen. Yeah, again, my name is Tim Tran, President-elect of the NorCal CCIM chapter. Today is a small part of our ongoing dialogue that CCIM has offered to our members for the last 50 years, which includes education, networking, training, and exposure. Due to the unprecedented and novel coronavirus, we are living in uncharted territory with overwhelming amounts of data, and that can be very confusing. So our goal today is to share timely information and perspectives with you so that you can execute strategies. We're facing a global crisis, and today we're going to focus on the struggling financial market and its impact on commercial real estate lending. The virtual meeting is one of the many things that we're bringing together to help you and your clients make informed decisions. Today, we have assembled a panel of various different experts on how COVID-19 is changing the landscape, the lending landscape. At the end of this session, the audience will have an opportunity for Q&A. And if you look down at your very bottom of your screen, you'll see a Q&A box. So at the end, feel free to type in your questions. We'll do our best to answer every question given the time slot that we have allocated for this virtual meeting. And so right now, without further ado, I'd like to just introduce our panelists. First off is Stephanie Chung with Business Finance Capital. And then we also have Rashmi Singh with Mission National Bank. And of course, our last and not least is Tim Takalsi, who's a CPA with Sensiba San Filippo. I'd like to start off this segment with by asking Stephanie to give us an overview of the lending options as it relates to the CARES Act. So Stephanie, if you can take over the screen and share your screen and give us a little summary here. Go ahead, Stephanie.
I just want to thank you, Tim, for the wonderful introduction, and thank you to all the leaders of CCIM for putting this together. We wouldn't be able to do this without you guys, so thank you so much. And I just want to do a brief introduction of myself. My name is Stephanie Chung with Business Finance Capital. We are also known as BFC, and we are a certified development company, also known as CDC, and we're licensed by SBA to approve, underwrite, and close loans on their behalf through the SBA 504 program. We're one of the largest CDCs in the country, and we've closed over $1.5 billion in owner-occupied transactions in the last 8 years. The current interest rate for the SBA 504 loan is 3.03% for 25 years. And we love to help small to medium-sized business owners obtain wealth through the ownership of real estate for as little as 10% down and 90% financing. And I've been in the commercial real estate industry for the last 12 and a half years. I am vice chair for East Bay CRE membership committee, and I'm also a member of CCIM, CBA, CRE, and ACP. I'm also an SBA certified underwriter. And prior to joining BFC, I worked for a national environmental firm. I'm originally from Los Angeles, California, and I got my bachelor's degree from UC San Diego. And I moved to the Bay Area about 8 years ago, and I currently live in Concord, California with my husband and 2 kids. My daughter is age 4 and my son is age 2. And it's, a bit of a challenge trying to work from home and take care of the kids at the same time. But it's also very rewarding because I get to experience them a little bit more intimately as they started daycare at an early age. And on weekends, typically I like to sing at church, but I can't because of coronavirus. But every day I'm passionate about helping small businesses grow. So I wanted to talk about the CARES Act. What is the CARES Act? It's the Coronavirus Aid, Relief, and Economic Security Act. The different programs within the CARES Act is the Economic Injury Disaster Loan, also known as EIDL or just Disaster Loan, the Paycheck Protection Program, PPP, SBA Express Bridge Loan Program, and the SBA Debt Relief Program. So small businesses that are affected by coronavirus are eligible for this loan, and SBA deems that all small businesses have been affected. You must have been in operation on January 31st, 2020. You're deemed a small business if you have less than 500 employees, or you can use other SBA size standards, such as having a net worth of less than 15 million and an after-tax net income of less than 5 million for 2 years average. You can be a sole proprietor, an independent contractor, self-employed on any trade or business, and a nonprofit with less than 500 employees. And it covers small businesses that have temporary loss due to COVID-19, provides paid sick leave, maintains payroll, meet increased production costs due to supply chain disruptions, have businesses that have business obligations and business debts, and rent and mortgage payments that they need to pay. You can apply for the EIDL program on SBA's website, and for the PPP, you would go to the bank that you have a business account with, and there are actually non-bank SBA lenders out there that are providing the PPP program. So for the disaster loan, the rate is 3.75%. For nonprofits, it's 2.75%. The maximum loan size is $2 million, and there is a $10,000 grant that you do not need to repay. It's full recourse, you need to guarantee, and additional collateral is needed. Automatic deferments for this program until December 31st of this year. So for the Paycheck Protection Program, PPP, it's 1% rate. The maximum term is 2 years. The maximum loan size is 10 million. And the loan amount is 2.5 times of the average monthly payroll and eligible expenses. And 8 weeks of this is forgiven if you use 75% of it for payroll and you retain your employees. And for each employee, the salary maximum is $100,000. And this is also the same for independent contractors. So there are some details. It's non-recourse, no personal guarantee is needed, no additional collateral is needed, no UCC is taken, no guarantee fees, no prepayment penalties, 6 months of deferrals, and the deadline is June 30th. So, this is a question that a lot of my borrowers are asking me. Can you apply for the disaster loan and PPP? Yes, you can. You can refinance your EIDL loan into your PPP loan. And you cannot take the EIDL loan and the PPP out for the same purposes. The $10,000 grant that you receive from the EIDL loan will be subtracted from the amount forgiven under the PPP program. So these are some items that you'll need for your application. You need 2019 business tax returns or just financials, so a profit and loss and balance sheet, 2019 payroll and 2020 January through March payroll expenses, health insurance premiums, retirement plan funding that's been paid, mortgage and rent expenses, and letter of explanation of assistance, need of assistance with certification on employee count by the owner. So there's also another program, the Express Bridge Loan Pilot Program. It can be used as a term loan or used to bridge the gap while applying for the EIDL loan and waiting for decision and disbursement. So this loan is up to $25,000. It's a very fast turnaround, and it will be repaid in full and will need to be repaid in full or in part by proceeds from the EIDL loan. So there's another program, the $17 billion SBA Debt Relief Program. It covers all 7A loans, 504, and microloans. 6 months of principal, interest, and fees are covered, waived, forgiven, however you want to put it. It also covers new loans issued prior to September 21st. So September 21st is what they said on the CARES Act when it first came out. We just got word yesterday that for sure all loans, all new loans issued and funded in June will be forgiven. We haven't gotten any other details on any loans after June, but for sure any loans, new loans that are issued in June or prior to June will be forgiven for 6 months. Relief may not be applied to payments on PPP loans, and it's unlimited to veterans and their spouses in the 7A Express Loan Program. So that's it for my presentation. This is my contact information. If you have any other questions, feel free to reach out to me. And Tim, I hand it back to you.
Thank you, Stephanie. That's the excellent presentation. I do have just a couple questions that we put together for the panelists, and we've broken it up into questions that are directly related to the COVID-19, and of course there's some general, CRE lending questions. So let me start off with questions, and this one is directed at Rashmi. Rashmi, are you online with us here?
Hey, Tim.
Yes.
Before you do that, could I make a couple of comments that some kind of last minute things that came in this morning on the EIDL loan?
Yes, go ahead. I believe you're talking about the $10,000 changes.
Right. So the SBA came out with an amended notice that said that they are going to limit the advance on EIDL loans to $1,000 per employee for a maximum of $10,000. So what that says for me is if we have a real estate activity, so say your typical real estate activity where you don't have a payroll and you don't have self-employment income, you'd be a candidate for applying for the EIDL, but you would not be entitled to an advance. Now the disadvantage of that is that obviously the advance was going to be forgiven. So you can still go ahead with a loan for EIDL. It's still a pretty good deal, 30-year 30-year amortization, I think at a 3%, 3.75. But it doesn't have the advantage that we thought it was with the advances. So I think the bottom line is if you have the opportunity to go for a PPP, go for the PPP. The EIDL is there for non-payroll, non-self-employed. I think that's all I have.
Thanks for that.
Yeah.
That is, things are changing constantly, and
Yes.
they're changing so fast. And I read something to that effect. So I'm glad you clarify that point of view. So just now going into the question session for the panelists. Rashmi, are you with us right now? Okay, so we'll I think she might be having some issues logging in. So we'll get back to her when she's able to get in. Next question I have is for Tim Tucholsky. So Tim, if how many EIDL and PPP can one person that actually owns several entities, how many can they apply for? Can you kind of cover that for us, please?
Sure. Well, again, the advice has changed a little bit given this breaking news this morning, but any legal entity can apply for either an EIDL or a PPP. So if you have multiple entities, and I give the example of a client who say has 4 partnerships, 3 single-member LLCs, and an S corporation. And in this example, the S corporation has all the payroll because it's the property management company, say for all of these real estate partnerships and entities. The partnerships themselves don't have payroll, nor self-employment income, and the single-member LLCs don't have payroll or self-employment. So in that case, the advice would be, if you need the money for operation of those real estate activities, you can go ahead and apply for the EIDL loan for any or all of those legal entities. But just understand that that will be a loan and you'll have to pay it back, and there won't be an element of forgiveness. For the S corporation, and it could be a partnership or it could be a sole proprietorship that has self-employment income and or payroll, then you would qualify for the PPP, again under 500 employees, and that would qualify for forgiveness. So any legal entity that you have can qualify for or apply. And the recommendation is that if you have payroll, apply for the PPP. Does that answer the question?
I think it's I think you answered the question. Thank you for your input on that. So the key point there is, yes, you can apply for several different entities. Next question is, how will applying for the EIDL and the PPP loans affect my ability for conventional financing? And I'll direct this as Stephanie and Tim. If you have any input, feel free to add after Stephanie.
So applying for the EIDL and the PPP will not affect your other SBA loans unless you default. If you default on your EIDL loan or your PPP loan, then there'll be an issue getting a new loan in the future.
Tim, you have anything to add to that?
Well, I'm not a lender, but my word on the street is that the banks are going to be so overwhelmed with processing these SBA loans that it's likely that your conventional loans will be put on hold for that reason and for other reasons, such as valuation issues, that type of thing. So in preparing for this seminar, we had a discussion about some best practices around applying for a loan. I think we'll probably talk about those in another question.
Got it.
And sorry, Tim, there's a question on the Q&A box, is that where do you apply for the EIDL loan?
www.sba.gov/disaster.
And this question is also related to Rashmi. Are you able to join us, Rashmi? Are you online?
No, she's not.
You're not? Okay. So next question for Tim Tukowski. If I apply for the PPP, will I still be able to take advantage of all the other tax benefits available under the CARES Act?
So that's a great question. You asked it just the way I wrote it. That's very good. So there are numerous tax provisions, tax benefits under the CARES Act. And two of those specifically are not going to be allowed if you go for the PPP. One is the deferral of the employer's portion of payroll taxes. So as we all probably know, when you have a W-2 wage, you pay your half of your FICA and FUTA and Medicare, and your employer pays the other half. So we're talking about that employer's half that does not have to be paid. It will eventually be paid, but it doesn't have to be paid until 50% will be due the end of 2021, and the other 50% will be due the end of 2022. So it is a long-term deferral of employers' share of payroll taxes from now until the end of the year. But if you are getting the PPP, you're obviously going to be forgiven any portion of the loan that is used to pay wages. So therefore, they're not going to give you the advantage of deferring the payroll taxes. So that's one. The other one is the credit. So there is a credit being allowed for $5,000. I think it's 50% of qualified wages up to $10,000. That's how you get $5,000. That will be claimed as a credit, refundable credit, so reduces taxes and could be refundable. But if you got the PPP, again, the government paid for that already. They're not going to let you double dip.
Understood. Yeah, thank you for the response, Timmy. That's great. Next question, this is for Stephanie. Stephanie, how has the corona pandemic and shelter-in-place orders affected commercial real estate loans?
So the coronavirus pandemic has definitely affected commercial real estate lending. We are getting some pre-qualifications in, and we are closing some of our deals. But there are a couple deals that fell out in the underwriting process because the borrowers were not confident in moving forward with the purchase of the commercial real estate property. So an example is a ramen shop. They wanted to purchase a property that they were occupying. However, initially when the coronavirus thing started, even before shelter in place, they were losing a lot of customers coming into their restaurant, and they quickly backed out in purchasing the property that they were currently occupying. But there's another business that I represented. It was a bakery in Oakland, and I called and asked how they were doing, and they're actually doing pretty well. A lot of people are still buying bread, and I think even more now because people are eating at home. And they do supply bread for a lot of the grocery stores out there. So their revenues have been steady, and we're actually going to fund their loan this month. So that's a positive story. There are some positive stories out there, and it's very important to stay positive, I think, for all of us to get through this. And we are putting together a list of deals that fell out because of coronavirus, and I'm trying to see how we can come back to them once this is all over. And we're focusing on refinancing deals right now. A lot of borrowers that have conventional loans with high interest rates and short terms could really benefit from the SBA refi program because our rate is at 3.03% for 25 years fixed. And some borrowers can possibly even take some cash out to help with any cash flow issues that stemmed from the coronavirus pandemic.
That's great. And if I may share my perspective on how the pandemic and shelter in place has affected CRE loans, as I mentioned in my listing for that office warehouse condo in Newark, the buyer is very interested, and she reached out to a couple banks, and actually banks are actually telling her to look at other banks because they're just so overwhelmed with applications. So they're really focusing on the IDO and the PPP, and this is a new client that they're actually turning away, which is ironic, right? So I don't do lending, but this is kind of the stuff that we're seeing out there on the street. Next questions, and this.
Sorry, I just wanted to add on to that. There are some deals like that I have, but if the borrower can get an extension and maybe wait about another month or so, I think banks are going to be focusing back onto the loans that they have on their books to process them.
Got it. Next question, and so this is for Tim Tukalski and Stephanie. Things are really constantly changing, and I think a minute ago we were talking about how that 10,000 has now been quote unquote reduced. Can you share with the audience some of the federal, state, and local regulations that impact commercial real estate lending? And so that's for Stephanie, and for Timmy, the same concept, but let's talk about deadlines. So I'll start off with Stephanie.
So you're right. Things are changing every day. When the CARES Act first came out, the rate was capped at 4%, and the next day changed to 0.5%, and it changed to 1% the day after. It is changing. It's very fluid. It's changing all the time. So it's a lot of work trying to keep up with that. Also, the shelter in place ordinance has extended a lot of deals that can close. The appraisal environmental companies out there, they're trying to protect the safety of their employees. And a lot of these employees are going out on the sites. So that is extending how the reports are going to come in. And a lot of appraisal and environmental companies aren't providing rush reports, but there are companies that are providing rush reports, but they're adding on additional fees on top of rush fees. So that's what I'm seeing.
Okay. Tim Tukalski, can you talk a little bit about the deadlines and some of the regulations that you're seeing from your end as a CPA?
Sure. So unless you're living under a rock, you all know that your tax return is not due tomorrow. Although I still have a couple of clients who are still panicking, thinking they have something due tomorrow. But No, from a federal or a state standpoint, your 2019 return is not due. It has been automatically extended to July 15th. That also counts any payment that you have. So normally when you were getting an extension on April 15th, you were also making a payment that estimated the tax that you owed. Otherwise, you're going to be subject to a penalty. You will not be subject to a penalty. It will be treated as if the deadline has been changed to July 15th. There was, again, the fluid situation. There was some controversy. Actually, it was clear that your second quarter estimate, by the way, your first quarter estimate for 2020, which is normally due April 15th, that's also been extended until July 15th. And up until a couple days ago, your June 15th payment, second quarter due for 2020, was going to be due still June 15th. But IRS caved on that. So that means your balance due, your first and second quarter estimate for 2020. And by the way, any other taxes that you may or may not pay, like excise taxes, things that are time sensitive. Now the IRS came out with a bulletin that said that all time sensitive activities, like 1031 exchanges, the 180-day requirement, the 45-day requirement, various other things that are dependent on the due date of the return, or not, just have a statutory date, are extended to July 15th. I had written an article that I published a couple of weeks ago saying 5 reasons why you should not wait till July 15th to file your tax return. 4 of those reasons have actually gone away because you've been extended. But I think the biggest one is my last one, which said, your tax practitioner will really appreciate you if you don't wait until the last minute and get your information into him or her. And there's some, good planning ideas or just best practices of why you don't want to do that. I have a good friend practitioner who says you don't want to buy the car that comes off the assembly line on Friday at 5 o'clock. So don't, drop off your information on July 14th and expect you're going to get good service. I thought that I would probably be, something popped up there. I don't know what that is. Not busy because nobody was filing their tax returns. I've just been incredibly busy advising clients on both the CARES Act and the SBA loans. So,
and thanks for
Congress for that.
Yeah. And this is the last question we have regarding COVID-19, and we'll move into the general lending questions. And this is for Timmy. What tax benefits do I get with or without the loan? So can you cover some of that briefly?
Sure. So very brief. The biggest one that I think affects the real estate industry will be the limitation on the business losses. So if you're a real estate professional and we're fortunate or unfortunate enough to have a very large operating loss, primarily maybe because you accelerated some depreciation deductions. In 2018, you were limited actually to $250,000 against your other income, or $500 on a joint return. That limitation has been suspended. In fact, this particular provision has been touted as being the benefit for the rich. So yes, but let's remember, you also took that benefit away from the rich. So it has come back in temporarily. It is now allowing us to, actually requiring us to go back to 2018. And if you were subject to a limitation, to amend that return and take that loss and get your refund from 2018. And if that loss exceeded your income in 2018, you're allowed to carry it back 5 years. So that's a biggie. That's allowing my very wealthy real estate clients who can take advantage of, say, cost segregation studies and accelerate depreciation are now rethinking those decisions. The other one that didn't come as a surprise because we were waiting for it, and that was the qualified improvement property. So any improvement to a commercial property to the interior, which is not structural in nature, was supposed to be under the 2017 Act deductible in full under the bonus depreciation rule. And Congress screwed up and forgot to mention that it had a 15-year life. So as part of the CARES Act, they did a technical corrections and now have clarified that interior improvements to a commercial building, non-structural, are in fact qualified for bonus and should be deducted in full. Again, retroactive. So if you want to take advantage of that deduction in 2018, say you bought a property or did a significant build in 2018, you have an opportunity to go back, generate a large deduction, and because there is no limitation on the use of that deduction, carry it back 5 years. So that's a biggie. The other ones relatively maybe don't apply to this group, but interest expense limitation for certain partnerships, tax shelters, was limited to 30%. That's been raised to 50%. And what else is there? Probably not a lot of other ones that I want to get into with this group. Those are the major ones.
Thanks for the highlight on that, Timmy. The article that I read in the Business Journal titled "A Bonanza for Real Estate Investor from the CARES Act." So for those of you who are real estate owners or you have clients that owns a ton of real estate, definitely reach out to your CPA or consultant and figure out what benefits you can derive out of that. So moving on to the next question.
I was going to say an interesting problem with that is that, so absolutely, if you haven't done a cost segregation study because of the limitation on the loss, now the cost seg people are going to be up and running. Here's the problem. I just talked to one of my providers yesterday. As part of that service, they're not required as yet, but it's best practice to actually go out and inspect the property.
Mm.
They can't do that.
Yeah.
So we're going to have to figure out a way that the IRS will accept a cost segregation study without a physical inspection and measurement.
Yeah, that's interesting how things are going to play out and how we are going to be working. What's normal is different now, if you want to call it normal. So we're gonna.
I want to let you know that there are quite a few questions actually in the chat box. Just want to remind everybody to ask your questions in the Q&A box. But there is one question from Dimitri. He asked, Stephanie, has anyone gotten SBA any disbursements yet, or at least approvals?
For the PPP?
Dimitri, if you want to clarify. Oh, but I guess either one, PPP or the EIDL.
So I was notified 3 days ago that one of our clients got $2.5 million funding. I just got notified this morning that a client who actually self-applied for a PPP for 2 of his businesses got over $300,000.
I think I have clients who apply for a PPP from a smaller bank had gotten the PPP already, but if you apply PPP from a bigger bank, is still waiting. I'm still waiting.
Well, yeah, I don't want to step on Stephanie's toes, but this particular client actually just went out on the internet, found a bank in Wichita, Kansas, believe it or not, and applied and was approved.
Mm-hmm.
Nice. It's good to hear the money's flowing.
Yeah.
Very slowly, but still flowing.
There are also other questions from the attendees. Atsuko asked, for SBA 7A 504 loan, what is the maximum loan amount?
$5 million.
That's Stephanie.
For the 7A and 504, it's at $5 million.
$5 million.
But if you're doing a 504 loan, that's about $20 million. Then the SBA portion, which we cover, would be at 5, and the rest of the loan would be covered by the bank, because we partner with banks to provide the SBA 504 loan.
Great. And then Atsuko also asked, is SBA lending on hospitality currently at all?
Yeah, I do have a deal for a hotel that's been put on hold. because of COVID-19. However, it's with Wells Fargo. However, they said once the borrowers are showing that the revenues are increasing, that they'll revisit the loan.
Great.
Yeah.
And then also another question is from Steve. Does that mean, I think you're asking Tim Tukalski, does that mean you can go back in time and amend your tax return with a cost segregation study?
Well, that's a more complicated question. The general rule is that you cannot amend a return for a cost segregation study. The mechanism by which you take the benefits of a cost seg is actually on a currently filed return, an accounting method change, and you get to take the cumulative effect of that on the current return. So there are some sections of that, but Steve, if you have a particular situation, I'm happy to talk to you personally about that.
Thanks, Tim.
So I see Rashmi is online. Welcome, Rashmi. Thanks for joining us. I have a question for you. What are some of the conversations like between lenders and borrowers? Can you kind of give us a highlight on that?
Thank you. First of all, I apologize for the technical difficulty I had facing earlier. So, conversations have changed in texture and content, both ever since COVID-19. Most of the banks have put on hold on new funding at this point, especially to the sectors that are impacted, such as hospitality and some of the commercial retail. However, having said that, I think for project-specific borrower, and then one of the important aspect, I don't know if the other panelists have pointed out, is that when borrowers are talking to the bank, they one thing that is not communicated adequately is that banks like to look at the big picture. So whatever happened with the project-specific cash flow presently due to pandemic and whatnot, but the borrowers which are also guarantors, have enough standing, enough liquid reserve to carry it through a downturn. We are still open to funding new loans. So it's very important for the borrower to keep all the information ready in terms of what other companies they own, what are the affiliates, what are the debt schedule, their overall credit capacity. And I hope that summarizes it.
Thank you. And kind of like a follow-on question to that is, what are some of the common mistakes borrowers and brokers make during the underwriting process?
Brokers know a lot about the property, and that is the error they make in too much. They focus a lot on the property. So it kind of dovetails to what I mentioned earlier, is ever since the last downturn that was financial market driven, or regulators for the bank, they put a lot of emphasis on understanding what we call global debt service coverage, or understanding the big picture. We are not relying on the asset value as a repayment source. We are relying on the cash flow, and that cash flow does not come only from the project. Of course, singular action rule, we have to look at your project cash flow, but many times if borrower's execution ability. So if you, as a broker, if you only present the deal, but you don't describe the borrower as to he has stabilized the several properties before, or he has multiple other property which he has leased up within a short period of time, the bank will not understand that. They will only focus on the project, and then you may not be able to get the desired attention. So yes, presenting all information, knowing your borrower or buyer in your case completely as to what is their background, what are their other sources of income, what are the other properties do they own, are they cash flowing well, would be very helpful in presenting a big picture to the bank.
Got it. And Stephanie, you want to take a stab at that? So what are some of the mistakes you're seeing on your end?
Yeah, a common mistake a borrower can make is when they don't disclose information to us, the good, the bad, and the ugly. We want to know it all so that we can address the concerns and get the loan approved and closed. Common mistake a broker can make is when they don't specify exact deadline dates. Sometimes things change during the underwriting process, and there are amendments to the PSA or extensions. The lenders need to know what their timing goals are. So it's very important for the broker to be very clear and communicate all that to us. Another common mistake a broker can make is when they don't provide market comps to VFC. It's very important that we can have that information provided to the appraiser that we hire and mitigate any valuation questions that they may have.
Got it. And then for you, Stephanie, so with that in mind, what can borrowers or brokers do to ensure that loans get approved and go smoothly?
Communication is definitely key. Like I mentioned, it's important for bankers, borrowers, brokers, the BBB, right, to all be on the same page. Appraisal and environmental reports should be ordered right away. Those are the reports that hold up deals. And, you know, when the bank provides a needs list, it's very important for the borrower to, you know, focus on the loan process early on, even though, you know, they're trying to run their small business, deal with COVID-19, you know, deal with everything around them. It's really important for them to give us all the information we need right away to ensure a smooth and successful transaction.
Thank you. And then Rashmi, when you want to take a stab at that, what are some of the things that brokers and borrowers do to make sure that their loans get approved and go smoothly?
Yes, timeline is important, especially if you're looking for purchase financing. But one other things that, you know, was bankers make this mistake more often than brokers is that pulling the prelim report, looking at if there has been existing issues that needs to be addressed. Those are the existing liens that are forgotten or they were removed but not recorded. So making sure, other than the appraisal and fixable report, making sure that all other third-party reports are timely ordered and communication channel is maintained.
I heard a best practice in this environment, and that was be prepared to answer the question, what happens if there's another outbreak of COVID? In other words, you need to have some contingency plans. And I think a best practice would be to be able to present the bank with, look, here's what we think we could cover if this thing lasted another 3 months. Here's what we think could happen if this comes back again, and we're, you know, again without cash flow for the next 3 months. So again, communication, but have that contingency plan.
Yeah, I agree. You know, we added new questions to our. Am I muted?
Go ahead, Stephanie.
Yeah, I agree. We added COVID-19 questions to our marketing package when we meet our borrowers over Zoom now. We're asking these questions. You know, how has COVID-19 affected their business? What are their plans to mitigate any problems due to COVID-19? What are their future plans? We're actually now asking for projections on all deals.
And I echo the same sentiment. As a bank, we have to manage risk, and pandemic planning is one of the board package that actually bank has to put in place even before pandemic happens. So we did have some plan. Some industry are more affected than others. For example, you know, we do have my bank, a small community bank with branches in San Francisco and Berkeley. We do have a sizable hospitality portfolio, both flagged and non-flagged, mostly in San Francisco. So I'm in touch with my customers, understanding their contingency plan. Should the virus situation is not resolved, what would you do? We are preparing a moratorium to help them carry through the situation, which is taking a lot of time as a bank right now. However, I'm getting a glimpse of what are the alternative uses of the property. Some of them are registering with the city nonprofit agencies backed by City of San Francisco to house, look into possible alternate uses, such as providing temporary housing for those who are affected, first responders and whatnot. So yes, people are coming, they are preparing for the contingency plan. Retail sector is the next sector which is impacted. We do not know how that sector will pick up, but we are expecting that, you know, people who have had a good ride, have built a good liquidity reserve. We do not expect a lot of new transaction happening this year, because sellers that are well capitalized would like to hold on to their property.
There
Thank
are a couple more questions, Tim. I'm going to read them out loud. One is from Shane. Are new loans still being originated for multifamily transactions? And I'm going to combine with another question. Dimitri asked, can you talk also about lending on new development projects? Is this still happening or paused for now? So basically new development projects as well as multifamily transactions.
It's a very good question. I will address multifamily first. There has been a quite uptake in multifamily transaction with bank competing, larger banks. We saw quite a downward pressure on cap rate, and interest rate were very low, and cap rates were lower than interest rate. And sometimes you wonder, people are relying on the rents going up significantly year over year to justify those kind of depressed cap rates. My bank, we took a decision to stick to the debt service coverage ratio that works and not go below 1.1 and do not make loan based on projection. And we are taking that stand. We continue to take that stand that if the rental income supports the loan payment with a debt service coverage, which is actually reduced for multifamily, which is 1.1. So essentially your NOI, if supports debt service coverage with 1.1, and there is a potential to do the loan. With current situation, I don't see any change. People need place to live unless there is a big downturn in tech industry, which we are not expecting. There will not be. We are not expecting any downward pressure on the rent. And again, the risk parameter is different for Class A building versus Class B building. We see that the Class B buildings are or Class C buildings are lesser at risk.
So you probably focus more on the area because like you look at the tenant type, right?
Absolutely. You would have different sort of LTV or debt service coverage requirement for a multifamily in Modesto versus a multifamily in Sunnyvale.
Right.
So location is very important.
Great. So there's also another question by Maureen regarding the PPP SBA loans for mom and pop independent contractors with jobs on hold. What are the parameters for the loan? Example, the debt to income ratio and reserves. Are the last month's bank statements being waived? Credit score? And same question for self-employed with no employees, thus no payroll.
Let me look at the question.
Yeah, it's long.
A lot of questions in there. Can't really.
So my understanding is that
I see it.
Is that the banks, while they have a responsibility for due diligence, that due diligence is very relaxed under the SBA, under the PPP program. So I believe they're still required to get underlying documentation like W-2s, 941s, but they can rely on the statement of the borrower as to were you in business on this particular date, those type of things. So they don't have to dig into the documentation that they would under a conventional SBA loan, because anybody that's gone through a conventional SBA loan in the good old days knows that it was a hell of a lot more pages than just two. And that's what the PPP application is, just 2 pages.
So that's true for small businesses that have business accounts with the bank that is processing the PPP application. But if you do not have a banking relationship there, it's going to be a pretty tedious process. They're going to want to know the client. They're going to ask for all the documentation for the business, for the self-employee. They're going to want to get to know the person that they're going to lend to. So if you have a good banking relationship there, it's going to be more relaxed. If not, it might be a little tedious.
Great. Sorry, Dimitri was asking, regarding the funding on new development, if we can elaborate on that. We just now discussed the multifamily side, but what about the new development, if there's any funding right now?
Yes, and I was getting to this, and I apologize again from getting overwhelmed by the whole multifamily. Yes, I get this question a lot about new development, and the parameters for lending have not changed. The investor development was always considered risky by the bank, and more so in 2019, even last year, we were kind of realizing we are at the high end of valuation cycle. So any development project that is relying on 18-month or 2-year of development and then sale, we're considered a little bit, with a closer scrutiny by the bank. Now, having said that, the development projects or construction projects are always underwritten to guarantors' existing cash flow or owners' existing cash flow without including the projected cash flow. And if the guarantors are, again, highly creditable, they have multiple other sources of cash flow, and the development of this project, the debt service coverage towards the new development cost does not rely on the projected income, because banks do not make loan based on projection. They make loan based on historical income. And development projects do not have historical income. As such, you have to rely on the owner's guarantor / income from other sources, which if it's strong and they have enough liquidity reserve, yes, that's a possibility even in this market.
Thank you. Just going to make 2 comments. Marty Lefton had mentioned that some institutions look at global cash flows and others do not. It is important to know there are still choices out there, even in this market. And Steve Peterson had said, multifamily loans are being made now. I'm working 2 deals now. The challenge is access for inspectors and appraisers, but lenders are still bullish to an extent on multifamily. That's great. Thank you for sharing.
Marty's question about whether some of the lenders are looking at global, all lenders are looking at global. Our bank is regulated by OCC, Federal Reserve Board, FDIC. The guidelines that has been given to the bank, global is an important requirement. The non-banking or non-financial, non-regulated institution, they may look at the project cash flow and equity into the project and whatnot, or the reserve. But bank always have a global cash flow has been an important criteria for all regulated bank. I believe there was another question from Steve that I missed. Do you mind?
Oh no, he was just making a comment about that.
Okay.
Multifamily loans are still being made. And who is there any? I think we're already close to 11:30, but I want to ask this last question: is who would be financing hotels now? Any inputs would be appreciated, if anyone.
Hotels, you said?
Yes, it says hotels.
We will be looking to finance. We do have hospitality is our big verticals, both flagged and non-flagged, limited service. Within hospitality, there are segments. We have some of the customers who have very strong relationship with housing, Tenderloin Housing Clinic or San Francisco Housing Authority. And those have been looking at hotels to house homeless population or population that are at risk and providing them an opportunity. So those are guaranteed income. The master lease are good quality leases, long-term leases backed by the city of San Francisco. And they fall under hospitality. So we are looking, those are still desirable loans for us. And then there are certain SROs that are owner operated, which has more risk, but based on if the owner has significant experience of running and managing the nuances that comes with that, we are open to that as well.
Great, thank you.
So we're coming right around 11:30. I know that, I want to respect people's time and other things that they have going on. So Helen, I'll turn it back over to you to see how you want to move forward from here on. We do have a couple other questions that we still have, but it's your call, Helen.
Yeah, so if you guys have any questions, feel free. I think we had put in the lenders, their contact information on there. If you still need more information, obviously feel free to reach out. We want to launch our last poll here, so that if you guys can help us to understand what you need so that we know what we should provide for you. Would you like weekly meeting, bi-weekly, webinar, monthly, or you're so webinar out that you don't want any more? Or you might want a virtual networking event or a deals and drinks event. So feel free to enter your poll right now, and then we will, the reason is that we really want to make sure that we make the best out of this current situation. We are all on, we are right now all shelter in place, so we're not out right now, but there are a lot of things that we can do during this time. All right, I think we got most of the answers here. So a lot of people like bi-weekly, and we'd be more than happy to do that. We have more than enough contents to share with all of you, so we definitely would love to share more with you guys. So the last thing I want to share with you here is just a quote. Here it says, ships don't sink because of the water around them. Ships sink because of the water that gets in them. So don't let what's happening around you get inside you and weigh you down. When I read this, I absolutely love it. This is the time, even though I know a lot of people are a little bit scared, but don't let what's going on around you to get inside you and weigh you down. This is a time for you to reconnect with a lot of people, reconnect with your family, clients, and friends. We can still connect here over the Zoom webinar, social media. So I hope you guys all stay healthy and safe. Until then, we are going to continue to connect with you to let you know what our other upcoming events coming up. So thank you so much for attending, and we'll see you soon. Bye.
Thank you.
Bye. Thank you all.